What's the deal with gold in 2024? It's not just glimmering, it's skyrocketing. Forget the typical rules of economics. This year, gold has smashed records and left experts scratching their heads. Is there a secret buyer hoarding it all? Are central banks playing treasure hunters? Or is this a case of global jitters turning into golden fever? From China's insatiable demand for shiny bangles to the world's unease over economic certainties, gold has become the star of the financial world. But what's really fueling this frenzy, and can it last? Let's dig into the drama behind gold's glittering surge. Picture this: a gleaming gold bar, compact and weighing just 100 grams, sitting in your palm. It's small enough to fit in your pocket but commands a jaw-dropping price of $10,000. Why? Because in 2024, gold has shattered records like never before, defying economic norms and leaving experts scratching their heads. What's fueling this surge? A mysterious mix of geopolitics, consumer anxiety, and a hefty dose of Chinese retail power. Before we unpack 2024's golden frenzy, let's revisit why gold has always been a coveted asset. It's finite. Only about 212,000 tons have ever been mined. Its near indestructibility makes it the ultimate store of value. Almost half of it adorns wrists, necks, and ears as jewelry, while the rest sits in bars and coins, locked away in private vaults and bank reserves. Unlike paper currency, gold can't be easily seized or frozen, making it a haven in times of instability. This enduring reputation has never shone brighter than in today's uncertain world. This year, gold's value has skyrocketed, shattering records and confounding expectations. Traditionally, commodities like gold follow a predictable macro playbook, with factors such as lower interest rates, economic instability, and geopolitical tensions driving prices upward. But 2024 has been far from conventional, with gold blazing a trail that has captivated investors, governments, and consumers alike. Emerging market central banks have emerged as key players in gold's meteoric rise. The trend began in 2022 when the freezing of Russian financial assets sent shockwaves through the global economies. For countries like China, this served as a wake-up call, a stark reminder of how financial assets could be weaponized. In response, central banks began hoarding gold as a means of safeguarding their reserves. Leading the charge, the People's Bank of China embarked on a historic buying spree, amassing nearly 2,300 tons of gold over an 18-month period. The acquisitions mark a strategic pivot. Gold is no longer viewed as merely a hedge against inflation or market volatility, but as a bulwark against the unpredictable tides of global geopolitics. Yet the rally isn't just fueled by central banks. The Chinese public has also played a starring role. In 2023, retail demand for gold in China reached extraordinary levels, with consumers purchasing over 1,000 tons, largely in the form of jewelry. This surge isn't simply a matter of fashion, it's deeply cultural. Gold holds a unique place in Chinese traditions, symbolizing prosperity and longevity. Jewelry pieces such as intricately designed bangles are not only cherished adornments, but also tangible stores of wealth. Passed down from generation to generation, these items serve as blessings, heirlooms, and financial assets, all rolled into one. What's particularly intriguing is how this retail frenzy is linked to China's broader economic anxieties. With the country grappling with a sluggish economy, the volatile stock market, and a lingering property crisis, gold has become a beacon of stability for Chinese households. For many, it represents a safer alternative to real estate or equities, particularly as billions have been wiped off household wealth due to the property downturn. The combined might of institutional and retail gold buyers has catapulted gold prices to record highs. Here's the twist: this gold buying frenzy isn't fueled by prosperity, it's driven by uncertainty. China's economy is on shaky ground, with a stagnant stock market, limited investment options, and a property crisis that shows no signs of abating. Real estate, once the cornerstone of wealth for many Chinese households, has been battered. Billions of dollars in household assets have evaporated as property prices plummet, and Beijing's efforts to revive the sector have done little to restore confidence. The numbers are staggering. Access housing stock equivalent to the size of Detroit lies unsold, a glaring symbol of the sector's collapse. For many Chinese families, this downturn has left their most significant investments, homes, depreciating in value with no end in sight. This economic instability has triggered a surge in anxiety about jobs, wages, and the country's financial future. With traditional investments faltering, people are turning to gold as a safe haven. Unlike real estate or stocks, gold is tangible, universally valued, and nearly indestructible. Its impervious shine represents security in an uncertain world. For Chinese households, gold offers more than just stability, it carries cultural significance. Jewelry and bullion purchases are seen as both a practical hedge against economic turmoil and a means meaningful way to preserve wealth for future generations. In Shenzhen's Shubi market, a bustling epicenter for gold jewelry, the shift in demand is hard to miss. Back in 2023, this glittering marketplace boasted a staggering $14 billion in sales, cementing its reputation as a hub for opulence and tradition. However, by October 2024, the scene had changed dramatically. Globally, gold's status as a crisis asset has been amplified by a cascade of geopolitical and economic disruptions. The ongoing conflicts in Ukraine and the Middle East have added layers of uncertainty to already fragile markets. Simultaneously, fears of intensifying US-China trade disputes loom large, with global markets bracing for potential aftershocks. The political landscape is adding fuel to the fire. Donald Trump's return to the political stage, coupled with his vocal commitment to imposing 60% tariffs on Chinese goods, has ratcheted up tension. These promises, delivered through his characteristic flair, have raised alarm bells for economists and policymakers alike. If implemented, such measures could significantly impact global trade, further shaking investor confidence. In response to these threats, central banks across the world are recalibrating their reserves. Rather than relying on currencies susceptible to political weaponization, they are increasing their gold holdings. This preference for gold reflects its enduring appeal as a safe haven, a universal hedge against uncertainty in an era where stability feels increasingly elusive. Looking ahead, gold's dazzling ascent shows no sign of losing its luster. With economic and geopolitical drama brewing, the metal's role as a safe haven might just get a whole lot shinier. Trade wars? Bring 'em on. Unpredictable policies? Gold's ready. Emerging market woes? It's been through worse. Gold isn't just an investment, it's a lifeline. Whether it's tucked away in a central bank vault or hidden in a secret drawer, it's the asset that never goes out of style. Forget stocks that swing or currencies that crumble. Gold is the OG of stability, whispering, "I've got your back," in a world that seems to have lost its footing. So here's the big question. With gold blazing through records and 2025 on the horizon, how much longer will its golden reign continue? One thing's for sure, this timeless treasure isn't just keeping pace, it's leading the charge. And there you have it, the glittering saga of gold's epic rise in 2024. But what do you think? Will gold keep shining as the ultimate safe haven, or is this surge just a fleeting sparkle? Are we witnessing a golden age of investment, or is the market about to pivot to something unexpected? Let us know your thoughts in the comments below. If you enjoyed this dive into the world of gold, don't forget to like, subscribe, and hit that notification bell so you never miss out on the latest insights. Who knows, next time we might be unraveling the mysteries of another global market. Until then, keep shining and stay curious.